What's up, everyone? Let's take a look at gold as it's being crushed this week. And we're going to take a look at a longer term chart and where we can expect the targets for the shorts and if we expect the bounce to occur at what levels. So, first of all, this is a weekly chart. We had the impulse up from 1160 to 2075, right? So, this took a few years in making 2 years to be exact, and we've been in a range ever since. So from 2000, we've tried to take that top again in March this year, and you can see we've posted a nice reversal candle, and we were unable to take to close above. So obviously, markets naturally reversed, and this week is culminating in this head and shoulders being triggered. So this is the shoulder, head, shoulder. This is the neckline. And if you project the neckline, it targets 618. Exactly. It's a confluence. It targets 618 at 509, 1509. So basically, you draw fibs from this low to this high. And this is the targets you get with this head and shoulder. Doesn't mean it's going to play out like that, because this is going to be a huge support right here. I think a lot of orders will be sitting here, specifically because we are in a range right now. So when in range, until the range is broken, we presume that we will be looking for a turnaround around these areas. So if we start seeing buyers coming in around uh, 1700 to from 1675 to 1700 area, if we get there quick, if we get there something like this, we might have a nice rally, maybe a 100-point rally easy from the lows, maybe targeting retesting some kind of previous support, now resistance, so maybe this area, etc. um, what to expect from short term. Short term, we're getting a little oversold today, obviously, but looks like this 32 around 1725 might be the target. So let's say 1730, 1725, and I'll look for quick scalp around that area, kind of trend. So we'll see. The volume is pretty decent, but as we've been talking in our Telegram group, the price inefficiencies tend to close at some point. So we will have a bounce because this was a massive sell-off and offloading of positions, and because the retail was positioned, I think a retail statistic came out yesterday that gold sentiment basically showing that net long gold positions are highest since May 19th, when gold traded by retail traders. So basically, this is them getting liquidated. So until we stop, until this is them throwing in a towel. Once that's over, we might see a nice bounce and retest these 1760 area easy. So look for buys, maybe a counter trend buys around 1725 to 30 level today. Again, if we don't get there today, maybe it's not a good idea to. But we also have a form C today, so we might get a little more volatility or follow through as well. So maybe we'll have a flush out, and then we'll have our counter trend rally. So why would we have a flush out? Well, last time we had this divergence right here. You see those this bottom and this bottom versus this and this. We had the same flush out and the reversal. You see how this reversal happened on the daily candle? That's basically what we need to see here. It went from 1760 almost 100 points. So 70, 80 points. Flush out, basically, I guess longs were sitting with stop losses around this level, right? Expecting higher prices, targeting these highs here. And once those stop losses started getting triggered, cascading effect took place. So maybe this 38.2 fib plus stop losses from here, although this has been long in the making, so I doubt. But this is still a level, so maybe we'll have a quick flush out. And if you see something like this form, we already have the bit like the bullish divergence we had here. We also have it here. Doesn't mean it can't keep going. It can easily, but it is there for now. And if we see a flush out, that might be a good sign to pick some up for, again, a counter trend rally, at least back to 1760, maybe even the breakdown point around 1785, 1800. So bounce and then continuation or breakout, whatever happens afterwards. We'll react to that when it happens. But for now, basically yesterday we sold off, consolidated, and another range extension coming here right now. So maybe again look for bottom around these levels later today. So again, FOMC minutes are in 2 hours, so anything goes depending on what has been discussed, and we'll see from there. But if you see a flush out, that's going to be a telltale sign to get long. So get ready. It might not happen, but if it happens, it might be a good kind of trend rally. Again, as you can see, it targeted all. It closed this price, and if this price was inefficient, it closed the gap and then sold off, and then it continued on its merry way. Same thing here. Price inefficiency closed, went up. So even here, partially, this two huge bar inefficiency got closed right here, and we sold off. So we're getting this price inefficiency again, and I think buyers will be coming in as we essentially went from 1800 to 1700 in 2 days. So usually when those huge moves occur, you have some kind of sideways consolidation with the bulls trying to take the market up, and maybe they will be successful, maybe not, but some type of rally, bear market rally, will happen. So again, FOMC, watch for a flush out as for today. So this candle like this, you might go long on the next day open. Stops obviously below here, target 1 to 1, 1 to 2, or previous level. So previous level here would be all the way up in 1878, which would mean that we break out from this channel. I doubt we're going to see that high. But if you pick it up around 1720 and you target 1780s, that's 60 points right there as well. Nothing to sneeze at. So hope this little gold lesson helps. If you're interested in discussing any of this, more than welcome to stop by apexbull.com. The link is there for our free Telegram group. Hope it helps. Enjoy.